And with that security token offering update this week, I think it's time to move into our main topic on security token trading platforms. What do you think, Herwig?
Thanks as always for sharing that market info with us, Kyle. But I think I'm ready to dive in. So it's a very relevant topic considering both of our companies of the week for this episode are marketplaces for security tokens. And now that we may have licensed exchanges and trading venues launching all around the world, it does seem like a pretty good time to review which countries are paving the way for security token liquidity, Kyle.
So as a reminder, before we dig into specific platforms around the world, I think the best place to start is by covering the technical differences between the various common licenses that allow companies to facilitate securities trading. Starting here in the US, we really have two different levels of approval, the first being an ATS license and the second one being a national exchange license. An ATS license, which stands for Alternative Trading System, is a license given to broker-dealers to allow them to find a counterparty for a securities trade. These brokers are essentially operating as over-the-counter or OTC desks, where they don't actually operate a live order book or facilitate large market-making operations, and instead they try to find an individual buyer for each seller in a matching order. This is different from an exchange, which is regulated separately from broker-dealers, and in turn they are allowed to operate a full order book model. An order book essentially allows an exchange to list, buy, and sell tickets to a common ledger, allowing smaller orders from other investors to slowly chip away at that pool of available shares for a given stock at a specific price. This can be much more efficient and a much more fluid trading experience, but it involves bid-ask spreads, market makers, and other layers of liquidity. The other very important distinction is in the terminology. So if a company has an ATS license, they cannot use many of the common words associated with trading. If they are not an exchange, they need to be defined as a marketplace, a trading platform, or one of these other vague descriptions. On top of that, there are smaller minutiae in terminology, including new listings, calling new listings placements, or calling the investors that use the platform subscribers. This is a reason why we have to be very careful about the words that we use to describe, and that's how you can differentiate the different firms here on the show. And so based on those descriptions, you may be able to tell which firm has an ATS license or if they're listed as a national exchange just based off of how we talk about them.
That's absolutely right, Kyle. Great breakdown. Many of these firms need to be on point with their terminology. And while it may be tempting to call any marketplace an exchange, it's really not the case. At least here in the US, it isn't. The ATS license has essentially become an exchange-light license, allowing more firms to participate in the secondary market without facing the same level of regulatory scrutiny that exchanges do. As of the end of December 2020 here, there were 59 broker-dealers who have received ATS approval. Conversely, there are only 24 licensed national securities exchanges, with 9 firms owning or operating those 24. So as you can see, this is an incredibly difficult license to get, especially for smaller firms, and so an ATS can provide a great bridge to liquidity while a firm builds its case to allow potentially for full public market access with an exchange.
So let's review some of the players here in the US. Which familiar names have been approved for that ATS license, Herwig?
Well, the SEC actually publishes a list every month detailing the brokers with ATS licenses, so we can cross-reference that to find all the information we need. We have some familiar names like Open Finance and T0, of course, which are live and currently trading security tokens. We also have a few that we've covered on the show before, including your company of the week this week, Oasis, right? In addition to others like Rialto, Templum, SharesPost, North Capital. A few others to note include Abe, which is a self-described platform dedicated to distributed ledger technology and tokenized assets, as well as Coinbase through Keystone Capital, and Seed Invest and Start Engine, 2 large crowdfunding portals, as well as Carta, which is a huge cap table management platform, also all have ATSs. And a final entry to note there is Distributed Technology Markets, which was acquired by security token issuance platform Securitize. So by my count, that's at least 9 ATS licenses that were granted to firms that have openly supported digital securities and tokenized assets, with a few more that may lean that way in the future. And who knows how many more are applying without our knowledge. Compare that with the list of national exchanges where NASDAQ, the NYSE, and the CBOE own 70% of the pool. There's one important national exchange to note, which is the Box Exchange, which partnered with T0 and hopes to launch the Boston Security Token Exchange. But unfortunately, they faced several rejections and have had to apply multiple times, so we're not expecting that to launch anytime soon.
Yeah, that's all very exciting news. I love that ATS licenses at least are being approved now, and there's more and more entrants into the space. But it's another great thing to note here is that many of these names that you listed, including Rialto, North Capital, Securitize, and even one that we didn't mention there, Texture Capital, have all happened very recently, and including Oasis, which just happened this week. So this has me really optimistic that more approvals will continue in 2020 or 2021 rather, to allow more firms to begin providing trading platforms for security tokens.
Absolutely. I mean, it's very exciting to think about where we'll be at the end of the year. But I think now it's time to turn our attention abroad, right? In Europe, there are also two levels of classifications for marketplaces. They have less restrictive multilateral trading facility, MTF licenses, which is similar to an ATS license. And then you have the national stock exchanges. In contrast to the US licenses, the MTF is granted more frequently and is actually slightly less strict than its counterpart here. But conversely, there seems to be less opportunity for private firms to receive a national stock exchange license in Europe, as mostly they are essentially all nationalized stock exchanges across Europe.
Yeah, so some examples of the MTF approved trading platforms in Europe include the high profile Archax in England, which is rumored to be very close to launch. But we also see platforms like Token Market, HQLAX in Germany, the NPEX in the Benelux region, Signum and the SIX in Switzerland, and a few in Malta, including LXDX and MSX. Not to mention the tokenized stock exchange and GSX out of Gibraltar. So those are just a few of the examples I could have picked, as there's almost too many to list. However, it's important to note that as far as I know, none of these platforms have launched trading services for security tokens yet. There's a lot of hype in Europe, and the regulators certainly have been in favor of regulating digital assets and blockchain-based ledgers, but we've yet to see one of these exchanges actually launch. So I think that Archax is anticipating that launch very soon, as I know they've been working on development for years, and that it could potentially be a watershed moment for the EU, because as we've seen even here in the US, once one firm is approved, it does seem like that's often a catalyst for larger change across the industry. Europe is certainly a leader on the primary offering side, with many completed issuances through Tokeny, Mount Pelerin, Bitbond, and many others. So I'd expect liquidity demands to continue to pressure firms into expanding into this new technology to support investors and assets that currently have nowhere to trade.
And as we've seen also there with the regulation across Switzerland, Germany, and now we just saw with Luxembourg, I expect a lot of that to help as well.
Absolutely.
So Europe is definitely positioning itself as a leader in the fintech and blockchain sector. But I think you make a good point that it's still yet to complete that full life cycle of a tokenized asset from issuance into trading on a secondary market. So it's a key infrastructure requirement that will lead to increased interest from issuers, as they're going to feel more satisfied with the opportunity and feasibility of tokenization, improving the assets available for investments, and therefore, of course, building a healthier market for everyone involved. And Archax and SIX and HQLX, of course, which just raised 14 million euros, they all really seem promising when it comes to making it happen in Europe, among others. But the US and Europe aren't the only jurisdictions focused on security tokens, of course, and I think it's time to dig in potentially to the biggest region of them all, Kyle.
Of course, you're talking about Asia. Especially with the news from your company of the week this week over in Singapore, iStocks, which just raised $50 million for development not only of their Singaporean exchange, but for a second exchange in China. So before we dig into that China expansion, maybe it's worth breaking down the Singapore regulation.
Sure, I'm happy to take the lead on this one, Kyle. So in Singapore, the regulatory body that governs the country, as I mentioned earlier on the show, is called the Monetary Authority of Singapore, the MAS. They have been very supportive of financial innovation and actually set up a regulatory sandbox where companies can build their own solution in fintech under their guidance of regulators, so ensuring all compliance measures are being followed while allowing the MAS to get a better understanding of the solutions being developed. And this innovative process allows many Singaporean fintech firms to develop innovative yet compliant solutions, and iStocks is one shining example of this process working to its full potential. So after joining the sandbox in late 2017, iStocks graduated in 2020 and as a recognized market operator, an RMO, and a capital markets services, CMS licensee. With these licenses, iStocks can use distributed ledger technology to issue, custody, and trade digitized securities in Singapore.
And since graduating, iStocks has done just about everything. The firm offers issuance services and actually now supports trading for 6 security tokens, 5 of which are funds, and the 6th one is a bond offering. The data is protected, so we haven't yet been able to actually access that trading data yet, but we can see that they're thriving. So much so that the firm is actually launching exchange services in China as well, as I hinted to earlier.
Building on its success in Singapore, in November 2020, iStock signed an agreement with the Shangjing Monetary Authority to create a digital securities exchange in Shangjing province of the Chinese market. So as part of the agreement, iStocks and the financial regulator there in China will work together to establish a Shangjing Singapore Financial Services Hub, which will include a security token exchange developed by, of course, iStocks. So this complements other security token exchanges in the region, including the Fusong Exchange based in Malaysia and other rumored exchanges developed by Huobi, Binance, and VaultX. Japan is also red hot. Local investment banks like SBI also looking to launch security token markets there.
And to wrap up our world tour, we have a few additional fantastic platforms to cover. The first one is one you've surely heard of on the show many times before, and that's Merge. Merge is a fully regulated exchange based in the Seychelles. While many that it may be a country that you're not necessarily familiar with, they are a member of the World Federation of Exchanges, which is the global industry association for exchanges and clearinghouses, and includes members like the NASDAQ, New York Stock Exchange, and the London Stock Exchange. So Merge supports security token trading, and they actually currently trade 4 security tokens, and they're about as legit as you can get.
Aside from that, we have many rumored Caribbean security token exchanges, mostly sponsored by technology platform BlockStation, which is working with countries such as the Barbados and Jamaica to develop white label solutions for their national stock exchanges to support blockchain technology and security tokens. So while these are exciting initiatives, no official date has been announced, and many of these are likely longer term projects. And lastly, I think it's also telling that the Euronext, the largest stock exchange in Europe, invested in Tokeny, and I presume that will one day also get into the game in the next few years, I think.
That's totally right, Herwig. I mean, some great longer-term plays are in the making, and some of those are the most institutional of them all. And to close out our world tour, I would be remiss if I didn't mention decentralized exchanges. In what is clearly one of the biggest fintech innovations of 2020, decentralized finance has opened up opportunities for issuers and investors around the world to leverage permissionless financial services, which include trading. Uniswap is the leader here, providing billions of dollars of liquidity for users around the world, and is technically the leading exchange by security token trading, with 11 total assets currently live on the platform, with dozens more coming, as we mentioned, from Realty. There are many other decentralized solutions in development, including Curio Invest and others, and these platforms offer smart contract-based solutions for trading assets. And so while these exchanges are absolutely operating in a legal gray area here with no licenses or real public accountability, they have offered innovative solutions and a much-needed liquidity platform for security token issuers that either have too small of a market cap to trade on larger centralized platforms, or in the cases like the Swiss-based Mount Pelerin, they have no other option due to the lack of trading platforms supporting European assets.
Yeah, I mean, DeFi is a huge innovation, and many hybrid solutions will also appear, I think. But Uniswap and security token dexes are absolutely a competitor to everyone we just mentioned, so make no mistake about it. They are actively supporting security token liquidity as we speak. And on that note, I think that's a great full breakdown of all the current liquidity options here in the security token industry. So we have a full list of over 70 exchanges that we published on our Medium blog that you can check out for more information on any of them. And if we left any out, of course, that you think are crucial to note, drop us a link on Twitter or LinkedIn and we'll check it out. And be sure to engage with the community at stomarket.com for all your latest trading information and news.
Thanks again for listening to yet another great episode of the Security Token Show. We'll talk to you next week for episode 79.